At the end of April, I published an article with Condo Vultures related to broken condominiums. And as it stands, we've just taken in our first broken condominium project that's looking to terminate their condominium and revert to an apartment house. The units were all purchased for $145,000 with about $20,000 per unit of upgrades. It's a single unit structure condo, so there's one type of unit for the entire condominium. These units were sold for anywhere from $220,000 to $245,000 to individual buyers and investors, who then took out loans that were for 10% down, 20% down, most of which exceeding the original purchase price of the apartments as apartments individually. Well, currently those apartments are selling for $36,000 at the auction block and $55,000 to $60,000 as bank REOs or short sale properties. Therefore, the developers are facing a difficult situation which can only be cured by purchasing back the rest of the building that they do not own already and reverting the title to a single titled apartment house and obtaining a commercial loan. There's several steps to the process. The first step, most obviously, is to acquire purchase contracts for the remaining units. The property is a 92-unit apartment house. 55 of those units are still held by the developer. At the current value of these units as residential units, they have an 11% direct capitalization rate applied to the income value of the properties. Right now, across the South Florida commercial real estate market, typical commercial properties and apartment houses are considered to have an 8% direct capitalization rate applied to their income to determine the value of the property. When the developers repurchase their units at a discount and put the entire building back together, they'll be able to reevaluate the entire property at the new lower capitalization rate. And lower capitalization rates mean higher values. Currently, the developer holds an inventory of income-producing property that is valued at less than the value of their loan on that property, even though there's good cash flow that pays for the loan and leaves a profit at the end for the investor, which is what banks desire. However, due to the looming threat of receivership that many condos are facing in today's market, that is what's depressing the values and increasing the cap rates that investors demand, in addition to the threat of special assessments or higher regular maintenance assessments across the board. So, in our example, the developer will be purchasing units for $60,000 per unit. That $60,000 represents our expected total purchase price, including closing costs. The developer does plan to use a bridge loan, which our mortgage brokerage firm will acquire, and the bridge lender is anticipated to use 2 or 3 transactions to close all 38 units. Once the 38 units are closed, then the developer will file the legal paperwork to enact a condo termination, thereby ending the legal existence of the subdivision that they created 3 years ago. By doing so, they will also dissolve the working agreements between the association and its service providers and transfer the control of all utilities back into the hands of the apartment house. We anticipate that between the fact that apartment house owners are not required to post reserves and that certain bills, including insurance and water and sewer, should be reduced by conversion from condominium to apartment house, the developer will not only recognize a month-to-month savings, but in addition be able to take advantage of the new market capitalization rate to attract commercial financing at attractive terms. Currently, the developer is at 115% loan to value for their existing construction loan. After, the developer will be at approximately 55 to 60% of as-built value with the addition of only 38 new units. We think that condo termination represents an effective way for investors to achieve higher cap rates on their investments, and in addition to assist the market in repairing itself by removing some of the inventory that's flooding under the doors.